Hey, what's going on, everybody, and welcome to your weekend briefing for the week starting June 5th. In today's show, we're going to look at our earnings season, which is getting thin. We're going to look past the debt ceiling finally and see what else is coming up. We've got OPEC meetings today. We'll talk about that a little bit. We've got lots of charts to look at. There's been lots of changes in the charts, mostly for the better. We'll look at some of our previous setups. Some of these are still setting up. And we got some new setups that are really interesting as well. So if you like what we do here, go ahead and smash that like button. It really helps us out. I am Kevin D in the Discord, full-time trader, 25 years doing this, CMT level 2 candidate, a mentor in the investor community since 2020, and we do these videos every week to help keep our members up to date on what's going on and highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and live mentoring sessions. So check it out down the link below. If you think you might be interested in joining us, we'd sure love to have you there. So, first quick disclaimer, everything we do here is for educational purposes only. We're not investment advisors, do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's get into this. So, our earnings season, you can see we've got kind of a thin list and a bunch of names here that you've probably never heard of. So, starting on Monday after the close, GitLab is probably the closest thing that to anything interesting that traders might play on Tuesday before the open. Sienna, maybe. After the close on Tuesday, maybe Dave & Buster's, because maybe traders will be bored. But really, none of these are probably going to be very exciting. Not much going on Wednesday morning. After the close on Wednesday, though, GameStop. Always exciting. And, this is one of the ones we've been watching, right? And, I've still got some options in this. I haven't decided. I've taken half my options off because they expire on Friday. If this starts moving down at all before then, the value of those is going to bleed right out. So I wanted to take some of the profit that I had in there and lock that profit in. And then, make a decision probably on Tuesday towards the end of the day what I'm going to do about the other ones. Probably don't want to hold these over earnings, but we'll see. Trip.com should be interesting as well on Wednesday after the close. Thursday, fuel cell should be interesting. After the close on Thursday, DocuSign probably be all right, and Friday, NEO should be really interesting before the open. So as you can see, things getting light in the earnings season, and it will continue to get lighter for another couple of weeks before we pick up again. Let's move on to what's coming up this week. So Monday, as I mentioned earlier, we've got the OPEC meeting going on right now, or actually, so I should say, the OPEC meeting there was a delayed start. The committees or something were trying to get something together, a deal together or something. And they didn't actually start the official meetings. And as far as I know, they haven't started them yet. And this happens occasionally with OPEC meetings. They're kind of scheduled for a day, but they do often run into another day or two if they can't get a deal together as they continue to negotiate. So we'll see what happens there. Obviously, this is important for oil, and the Saudis have been saying that they want to see oil. They want a production cut. They want to see oil go higher, and we know that the Saudis will do this unilaterally on their own, without the rest of OPEC. So, and that's why we've seen a bit of a run up in oil over the last couple of days. So this is quite interesting, and like I said, this could stretch into tomorrow, or if they do, have a meeting. It's already getting kind of late there. If they do get some meetings and get an agreement today, we'll see the reaction to that late tonight and in tomorrow's trading. Also tomorrow we have the ISM Services PMI. This is really important. It's kind of an inflation measure, and we need to see the services inflation come down. So a very important, probably the most important number in the entire week. I mean, you can see that the week is actually pretty light on economic data. So all traders will be watching that ISM Services PMI. Also on Monday, we have the Apple Worldwide Developer Conference, and this is where they are expected to release their $2,500 pair of glasses, VR headset. So it'll be interesting to see that and see how Apple stock reacts to that. Apple very, very near an all-time high right now, so obviously traders will be watching that very closely. Tuesday, nothing. Wednesday, crude oil inventories. So anything that happens, with the reaction to the OPEC meeting on Monday is potentially erased or reversed or added to by crude oil inventories on Wednesday. And we also have consumer credit report coming out on Wednesday as well. Unemployment claims on Thursday, and then nothing on Friday. So you can see pretty light for economic data and events. All right, let's take a look before we get into the markets at our short-term market regime tracker. This has been sort of inching up lately, and this is the highest I've seen this since the middle of April. And we are now just moved from sort of in the middle of the bullish chop range into the low end of a bullish trend. Obviously, this could reverse quickly. This is not really predictive, although trends in motion tend to stay in motion. All right, we're going to take a look at the markets. We'll look at the major indices. We'll look at international markets. We'll look at some important commodities. We'll look at all the major sectors and some individual stocks, the FAANG stocks, and some setups we're watching. So let's dig right in. We'll start with SPY representing the S&P 500, and you can see that we are in a nice uptrend. That trend has been accelerating over the last week or so. Right off that trend line after trying to poke below it. This is all looking good. You can see it now. We're approaching, or we've basically closed this gap here, but the top of that gap is acting as resistance. And we haven't seen these levels since August of last year. So sure would be nice to get through this and maybe go attack this area here, going back into April. So soon we will be making, if we get much farther above here, above this pivot level right here, we will be making 52-week highs. So no reason to think that this is going to stall out here, at least in the SPY, because breadth is improving, and we'll see. I'll show you why we know this in a second here. But breadth is really improving, and I think that this could run a little farther before it does stall out. Let's take a look at our Qs, because this is what started it all. And this is why people are saying, oh, it's just 7 stocks. It's only 7 stocks. Well, that's not true anymore after the last couple of days. But yes, I mean, that has been true. It's been all about mega cap tech. I'm having trouble speaking today. Sorry. It's been all about mega cap tech and our semiconductors, and especially NVDA. We can see, though, that the momentum is slowing. And you know what? I am totally fine with this. In fact, I find this encouraging that momentum is slowing here. Because as momentum slows here, let's take a look at IWM, our small caps. Look at that. This is exactly what we need to see in this market. If we're going to be bullish on the market, if we're going to be able to put some risk on, this is what we really needed to see. We've finally broken out of this range with authority. The last time, any other time when we tried to get above this level, we pulled right back in immediately. Didn't even get that far. Not long ago, we had a decent move right up to the 200-day moving average and the 100-day moving average right there. But you can see, look at that ugly candle on that day. Got up there, tagged it, and pulled right back instantly. Well, this time, it went up, it went through those moving averages, and it closed on the highs. Very bullish behavior here over the last couple of days in IWM. And also, so this is why I'm saying that breadth is really improved. Because, this is 2,000 of the smallest stocks in IWM. These are the small caps, and without small caps participating, we really got to, we're not sure if we can trust a rally. And here they are participating. And not only are small caps participating, we usually don't look at this one, but this is IWC. This is micro caps. And we see very similar behavior here. Now, we've been up at this level before. We're not through the 200-day moving average on this yet. But again, we see participation out of micro caps. This is risk-on behavior we're seeing here. And look at, we're seeing this turn up here is showing us the relative strength of the SPY, and that is turning up. It's outperforming SPY. So that's why I'm saying, you know, it's almost a good thing that the NASDAQ, those Qs, are underperforming right now, or at least over the last couple of days, because we're seeing that performance now shift from the mega cap tech stocks into our small cap stocks. Really important to see this. All right, moving on. Let's take a look at our volatility index. And wow, that has just come crashing down, down under 15. I really haven't expected to see that. I thought we would stay in this range up in here. But, you know, once it got below 16 here, you know, another down day and down into 15. See, I've drawn a yellow line at the close because I want to go back and see when was the last time we were at this level at 1460. I go way back. Okay, we came down and got near that level back here in November of 2021, but then went up from there. Got to go farther back. Okay, we know, you know, we were down, had some wicks down on that level back in June of 2021. So 2 years ago. Got to go back even farther. Go back farther. Wow, we're really backing up here to get to these levels, aren't we? February of 2020, right before the COVID crash, was the last time VIX was at these levels. Amazing. Now, you know, this has got to be bullish unless you expect another pandemic to start up suddenly or some other black swan. But, you know, with VIX down at these levels, I don't care what you have to say about breadth. This is not bearish. You know, it is maybe does show a little bit of complacency, but you know, longer term, this is certainly bullish behavior that's going on here. Now let's look at our 10-year yield. We expected that to kind of roll over as a debt deal, as we got a debt deal. You know, that was coming down into it. Friday, that popped up a little bit, which is sort of interesting to see. Sort of keep an eye on this and see what happens here. Let's move on to our dollar index. Where is our dollar index? That's not it. Okay, here's our dollar index. Very similar behavior to that 10-year yield. I expected this to see this roll over. I didn't think this support would hold. And, you know, this is only one day here, this green day, with the dollar moving back up. We could easily see this roll over again. Let's move on to our dollar cost averaging system. Here we're looking at weekly charts. This is the SPY. Obviously, this has done really well. This has been green for a while. Nothing to see there. Same with the Qs, obviously. Look at this acceleration. We should actually, you know, maybe fear this acceleration to the upside a little bit. But again, I was mentioning earlier, you know, if the Qs start going sideways because money is rotating out of that mega cap tech and into smaller caps, that's just fine. Qs can go sideways for a while because, and here's the really important one. Finally, we've been waiting for this MACD to cross up here and to get above these moving averages and turn this system green. So our small caps dollar cost averaging system has just turned green. So that's really good to see. Very bullish behavior here. All right, let's move on to our global indices. So we'll look at our all-world index, less the U.S. And we can see after some fairly bearish behavior here, and you know, some gaps down on Wednesday, we had a nice reversal candle here. Really, what we had was capitulation. You know, big gap down, and then it moved down. It got very near a support level, and it did it on big volume, and then it popped up and it drew a nice looking hammer candle there. Great reversal candle here. And then the following day we gapped up and had a very strong day. Finished on the highs. The next day gapped up, way up into here. Gapped up too much in my opinion. And you can see we've got a little doji in there, and that's not surprising after a move like that in a couple of days. With those kind of gaps, not surprising that we did move right back into this range again. I think, you know, if we can start maybe making a slower move, a little grinding move up here into this top of the range, consolidate, that would be what we'd like to see there. That would be really healthy. Yeah, this is a really good move off those lows. Let's look at EFA. We're going to see very similar behavior here. This is the Europe, Developed Far East, and Australia index. And again, reversal candle on volume. You know, nice follow through on that, and just above this this nice uptrend as well, retaking all of that. Again, nice slower move, slow down now, move up, grind up in here, would be quite healthy. Here's emerging markets. This one didn't, we didn't see the sort of capitulation moves as much in this one, but we did see nice reversal here, nice bounce off of that trend line. And again, coming into a really important resistance level up here. FXI, this is China large cap. This got pretty ugly after losing a really important support level. But again, we had that reversal candle on Wednesday. Nice hammer candle in there. Didn't have the kind of volume that we had in some of the other ones, but a good follow through on Thursday and a giant gap up on Friday, to get right back above that important what was a resistance, you know, support resistance level, and closing right around the 21-day moving average and doing it with good volume. All right, let's move on to gold. Not really much to see here. You know, a little choppy in here. You know, after a pullback, bit of a bearish engulfing candle here on Friday for gold. Silver. Kind of similar behavior in silver. Not really, it's not an engulfing candle, but it is a bit of a reversal candle to the downside there after hitting the 21-day moving average. And copper, there isn't really much to see here either. Kind of a doji going on here as it tried to retake some resistance. All right, let's move on to oil, because this is where there's a little bit of action happened late in the week. Or I guess actually there was a lot of action happening all week long. And we've got that, you know, some action coming into the OPEC meeting. So we had a breakdown out of this rising wedge. That's to be expected. That's what rising wedge usually, how it usually resolves out of a rising wedge. Still having trouble talking. Breaks down, comes down, finds support right where it should, and reverses and starts to move its way back up. And then found resistance right at the underside of that rising wedge. This is going to be really interesting to watch tomorrow or when these futures open later today. Let's move on to natural gas. And this one is just kind of chopping around, doing nothing. This is, you know, not as affected by what's going on in OPEC, obviously. XLRE, the energy ETF, similar price action to oil, of course, but you know, I think maybe showing a little bit more strength potentially here. So this could be interesting to watch on Monday. And the oil services ETF. And you can see that this one really strong move Thursday, Friday. Broke through its downtrend line, broke through the 50-day moving average. So this is saying, hey, we should expect oil to start trending up again here. TAN, bit of a choppy mess lately. We'll see if this gets any help from what's going on with OPEC. Consumer discretionary, moving on to our major sectors. This has been one of the stronger sectors. And you can see that this uptrend in this is starting to accelerate here. Really nice move on Friday. You know, probably want to start looking for some plays in the consumer discretionary space. Because if we start rotating, and this is actually showing us some rotation from tech and into consumer discretionary, and we're also seeing some of that into industrials. So these are two sectors that I think we want to go play in, and I do have a couple of plays in this industrial sector to look at in a few minutes. Let's also look at our financials here. Financials well behaved over the last couple of days. Big gap yesterday, and moving right up into a little bit of minor resistance here. But I like this move off the lows here. Comes down on, you know, fake breakout, or reversal as it broke down out of this low side of this triangle. Did it with pretty decent volume and reverse, gave us a hammer, and then continued to the upside. Now we're trying to break out the top side of that triangle. So worth watching there for the financials. And KRE, the regional banks, looking very healthy. Really nice move here in the last couple of days. Again, off the bottom of that triangle. And this has moved up and through this major, what should have been major resistance. I got through it like it's nothing. You know, another update out of here would be very, very bullish. So, you know, names you could watch here, PACW, some of the others. I haven't been watching these for a couple of days, but some of the others sort of elude me. Look at this, you know, PACW here on Friday. Look at that, nice bull flag there, and broke out of the bull flag. You know, making a move up, coming into a bit of a resistance though. But yeah, this is definitely worth a watch if financials is still looking good on Friday or on Monday. Let's move on to healthcare. And you can see we've had a nice reversal after a nasty breakdown out of this sort of declining channel here. Almost failed support. And strong reversal up out of there, and on pretty decent volume too. Let's look at XBI or biotech, and we can see same sort of here. We've had broke down out of this upward range, found support a couple of times at the 200-day moving average, and started moving up and away from there. XLRE. So our defensives are also moving in all of this. You know, this, I mean, obviously this is an everything rally on Friday. All sectors were very green. In fact, the worst performing sector was up 1%. That was the worst of them. Very strong day on Friday, obviously. And so, yeah, we're seeing rates turn up off the lows here. Looking fairly strong. Staples. I think we had a big move, fairly decent move there on Friday, and again looks to be reversing its downtrend. And utilities, like I said, the weakest of the bunch here, but still nice strong green day on Friday. Let's look at XLK, technology. Actually, I'm sorry, technology was the weakest sector on Friday, not utilities. And again, you know, that's fine. We don't need those 7 stocks anymore if everything else is going to perform well. And everything else has been performing really well the last couple of days. Let's look at our communications sector. And this one was also quite weak on Friday. And up under resistance, but still looking pretty healthy here. I think this is going to continue to grind a little higher, but probably more slowly as we see that rotation to everything else. Semiconductors. And you can see that these have slowed down, taking a break. This is a healthy break. This is, you know, let's refresh things a little bit here. The longer this goes sideways, the more I'm going to trust a move to the upside on this. And okay, let's move into our FAANG stocks, or our expanded FAANG stocks. We've got NVDA in here now. I think we're going to be watching this for a while. And again, we've got a little bit of sideways action, some consolidation in here. This stock deserves a rest up here, and it is looking fairly healthy. Again, though, I think that the longer this can consolidate up in here, the better. And if we can get up into this all-time high and get really tight in here for a few days to a week, I'd love that. I would buy that breakout. Conversely, if we were to come down, I drew this trend line in here, but if we use that as a pivot, if we were to come down to this level and then bounce off of here, that's a bounce I'd probably be interested in buying. Yeah, I'm going to be watching this closely over the next little while. All right, let's move on to Meta. This one continues to grind higher. Starting to accelerate a little bit maybe over the last week or so. It got a lot of gap to work its way through here. There's no reason to believe this uptrend won't continue for quite some time. Apple, as I mentioned, they've got their developer conference coming tomorrow. And look, this is right up near this all-time high. But in a rock solid uptrend. So unless they blow it at this developer conference, unless these, these glasses or VR headset that they're going to release looks like a total dog, I think we can see Apple continuing higher. Amazon. We talked about consumer discretionary. It would be nice to see Amazon break out. Now we've tried to, or we've gapped up, out of this upward channel. It'd be nice to see Amazon on Monday continue higher from here and through this resistance. Netflix. Netflix has come into a little bit of resistance. You can see we've got that gap there. This gap goes way back to poorer earnings. But things have obviously turned around for this company. But it's kind of looking like, it could be a nice play out of here because it's kind of tight, but I don't know. I think it just needs a little more time here, and I think that the people's focus is going to go on to other stocks right now. Google. You can see that this is consolidating nicely under resistance. I think it needs a little more time here, especially if the rotation continues to sectors other than tech and communications. Microsoft. This continues to grind higher. But again, wouldn't be surprised to see momentum here slow. And then there's Tesla. And Tesla, the little stealth rally that this had really started to accelerate through the week. But we've come into an important pivot here, and you can see it stalled out there on Friday. I think that Tesla needs to go sideways a little bit for a few days before it can continue higher. All right, let's move into some of the plays we've been watching. We've been keeping an eye on Uber, and we're watching this range that it was developing in here, and it may be starting to break out the top of that range. Let's see if we get continuation from there on Monday. Valero Energy is one that we were watching. Now, we were watching this wedge develop and expected to see this break out to the downside, and it sure did, didn't it? That was a nice move out of there. You had to be quick if you were going to catch that. You also had to be quick to get out of it. Seeing that turn, it was interesting that this didn't turn up with oil and all the OPEC news, and I think that's because there's probably more gas in this company than oil. And it is a refining company anyway, but it did have that turn up on Friday, and that was definitely, this gap up was your sign to get out of that. This play the downside play on this, because we were looking to short this, the downside play on this might be done now. All right, GameStop. This one has not moved as quick as I thought it would. We had the one day, a really nice day in there. That it went fairly well. When it got up there, and it was actually the following day is when I sold half my calls on that. because after a nice day like that, you want to, and breaking through resistance, breaking out of the pattern, you're playing, getting through resistance. When you see it start to pull back the very next day, you've got to wonder if you really want to be there. So I managed to close out half my options really early in the day, right near the highs, and was happy I did that, because you can see that we've just been consolidating since. Now it started to move up again, and I would not be surprised to see this move higher, to continue higher. But remember, we've got earnings on Wednesday, it was, after the close. So if you stay in this play, you probably don't want to be holding, especially if you're holding stock, you don't want to be holding that through earnings. And Coursera, that one, we were looking at this consolidation in here, or we were expecting this to consolidate in here. It did, and had a nice break out of that consolidation on Friday. Now we've coming into this very long-term downtrend. This downtrend started back in shortly after the IPO in April of 2021, and coming right into that level. I think, if this can continue higher or move through here, we could see a fairly quick move up into this zone right here. Should probably draw on a resistance line there for you guys. Yeah, I expect to see resistance there, maybe a little bit right there, somewhere in that zone. But yeah, could move, over the course of a week or two, maybe even a week, to get up to this resistance level. All right, let's look at some new names. So it was a little tough to find setups because a lot of stuff is really kind of stretched, as you can see from these charts. And may needs a little bit more time, but I did manage to find some names. They're probably names you haven't even heard of. Well, this one maybe you've heard of, the Vita Coco company. This is a coconut water company, and you can see, look at the this nice uptrend that it's been in since November of last year, when it bottomed out here on earnings. It's been a solid uptrend ever since then. Anytime it comes down to the 50-day moving averages, it bounces away strongly from there. It doesn't spend much time at all below the 21-day moving average. And you can see that we're putting in a really tight bull flag up in here. And for context, we are at, here's your IPO back here. We're at all-time highs right now. You can see the strength relative to the S&P 500. One little concern here is the RSI. A little bit of a divergence going on here on RSI. Not too much of a concern, because this is just so tightly, our risk here is very tightly defined right now. You play a breakout to the upside of this with a stop just below the low of that range. Easy peasy. All right, CW Industrials, ticker on this is CSWI. Now, we're a little late, but this looks good for a longer, at least an intermediate term move. So what I'd like to see here is a little pullback, but let's just back out of this for context. Actually, let's go to a weekly chart on this one. Okay. I'm not sure what all this mess is back here. It looks to me like this is they took over another company's symbol, perhaps, maybe. Because obviously there's a massive change happened right here. And I suspect this is an IPO, and an IPO into some old ticker symbol. So I'm just ignoring everything that happened before this. And looking for here, and you can see that we've come up into basically all-time highs in this. On our weekly chart. Now, this level right that it's at, that it broke out of on Friday, really important level here, and you can see how long this has been in here, since April of 2021, and a major breakout that's just happened here, and you can see it's tried to get above that level a couple times before, but couldn't hold it. Well, this time it held it and pretty much closed on the highs on the week, and we move back to our daily chart here. And you can see how strong this move on Friday is. Pretty decent volume. Would have been nice to see more volume than on that red day, but this is a really good move out of here. Now again, this might be worth chasing if this, if this opens and starts, continuing higher on Monday. You might have to question if you should be chasing it or not, because it looks like it's going to go, and it looks like it could go for quite some time. I would very much prefer a pullback, and maybe a pullback in one of these, pivot levels here. Let me draw that in. If it did pull back to there and bounced off of that level, so that would be 148.91, so 149, maybe even a pullback to 150 and bounce at 150, which would be about half of that candle, and then turned. I think you got to be watching this intraday for that kind of price action, and that's something that I would get in on. I'm really reluctant to chase things, so again, pullback would be nice. That's the way I'd want to play it. And finally, one more little penny stock here, really super speculative, but I just like the recent price action, and think this could really go, and I can really define my risk on this one. So let's zoom right out here. Okay, you can see in the purple line I've drawn, that's your IPO right there. You can see after IPO, it chopped around a little bit. It actually had, it IPO'd at what, 41, and it had a really nice move up into 80. Obviously, it did that too quickly, pulled back. Initially, a bit of an overreaction on the pullback, and then just kind of went sideways for a bit until it finally broke down. And it spent basically the last year and a half in this downtrend. Now, you can see it tried to bottom out here in the last 6 months or so. That bottoming process failed. It came down lower. I like this bottoming action here. Nice V bottom in here, right? This bottoming action, it looks much better. You get capitulation. Look at that. Look at the volume on this red candle right here. The highest volume it had seen since, back in January. You don't see volume that high very often in this stock. And then on the way back up, look at the green volume here. Awesome green volume as it moves back up. Okay, so obviously we missed getting in on all of this, but it may be giving us a chance now. We've got this nice bull flag forming. And so this really defines our risk. Now, I'd like to see this go sideways for another week or so, maybe until we hit this downtrend line and then break out of there. That would be ideal to me. And it kind of looks like we may do that. You can see the volume falling off in this consolidation. This is a great setup here. So got to keep an eye on this, set some alerts. Even either side of this, because everybody's expecting this to break to the upside. Even a move to the downside is potentially a decent move, although you've got to watch out for these moving averages. There are a number of levels of support close by on the downside, whereas to the upside we've got a pretty decent move before we get to our first level of resistance, and that would be around 285. So we get a move from about 220 to 285. That's a decent percentage move. If you get through that 285, you got this 200-day moving average here, and then you got the bottom of this big gap are also potential areas of resistance. But I don't usually like the penny stocks much, but this is a play that I think is setting up beautifully. All right, that's all the stocks we want to look at. Let's take a look at what we've got coming up next week for our members in the Discord. Remember, you can join us in the Discord. Check out the link in the description below if you want to come join us and get in on their very next mentoring session, which is coming up on Wednesday. We do our trader roundtable. This is really a discussion that anything that anybody wants to talk about, and we really encourage participation from our members in the Trader Roundtable. Everybody gets a chance to speak, and these sessions are always really educational and usually quite fun as well. So we'll be looking forward to seeing our members there, and looking forward to seeing you there as well if you decide to join us. I want to thank everybody for making it this far. Hit that like button, share and subscribe, and we'll see you all again next week.